Hey guys, Czar here. Good morning to you. Hope all is well. Happy Tuesday. Tuesday, September 3rd. First trading day of September. We just came out of a long weekend here in North America, Labor Day. Yesterday, Monday, was a holiday, so today really feels like a Monday, and I'm guessing that price action will also feel and behave like a Monday as well. So I'm going to be extra patient, as I typically am on Mondays, and sometimes Fridays, and sometimes Tuesdays, and sometimes Wednesdays, and Thursdays I'm sometimes patient as well. But today certainly will be a little bit extra. We also have some news coming out, of course, too, red folder news at 10 a.m., and that can put a little bit of a wrench in the works if one is looking to take a trade right out of the gates here on the open. It is 9:29 almost, and that means 1 minute away from the open here on New York. Let's take a look at the Three Sisters. I'll tell you what, I'm going to go to the Three Sisters daily charts and like to get the daily frame or perspective and context if I can here, coming into a new week. Again, it's Tuesday, but a new week of trading. And then also coming into the day, of course, as well. So here we have the Three Sisters, NASDAQ, S&P, and Dow daily charts. We've had that 17% drawdown right into here from peak to trough, and then this rally back into this resistance area. Since then, we've been kind of selling off and then trying to rally and selling off a little bit more. But today coming in, we have an up day, but a bearish body. What does that mean? It means the high of today has broken. It means during the Asian and or the UK session overnight, the futures contract has broken above the prior day's high and is above the prior day's low. So it's an up day, but the body is bearish, meaning it's flipped over and it's kind of selling off as we speak from where it was earlier. We also have an up day here on the S&P with a down body as well, and we have a inside day here on the Dow with a bearish body. Getting back to the Three Sisters on the 1 minute chart, this is volume weighted average price with 2.5 standard deviation bands on the top and the bottom. Coming into the open now, in fact we are open, have been for 26 seconds. There's the first candle of the session. I'm going to zoom in. As you can see, guys, we based on that daily down candle, we are below VWAP here. That's the futures VWAP for the entire session. It began last night at 6 p.m. and now, of course, it is 9:31 a.m. almost. Looking for that 1 minute open range to get set right here in about 9 seconds, and then that will move out to the right and be set for the entire session. I'm going to zoom in a little bit here. There we go. There's the 1 minute open range. I'll be watching this here, guys. Driving down here on the NASDAQ, S&P, and kind of inside the open range here on the Dow. Not going to do anything out of the gates here, but selling down for sure. For now, nothing to do here. This is my power grid, guys, and there's that daily chart again up in the top left-hand side. And you will see that the ranges here on the 30-minute, been kind of range bound here through, and messy, quite a messy 30-minute chart here through the UK session so far. Of course, the UK session continues here for a little bit. And we tried to sell down there just a couple of minutes ago here, and have already been bought back up again. Let me just get my indicator on here to show the open range. There it is. See those lines? Top of the open range, bottom of the open range. We'll watch that now. Dropping down to a 30-second chart here, guys, just to get some more surgical precision. And as you know, and as you can see, and as you can hear, I basically say the same things every day, and that's to keep a consistent look on the market and approach to the market. Mastering one thing, doing it over and over again, and trying to become a master of the nuances here on this market open play in this particular situation. To the Three Sisters. Nothing to do here. All right, guys, sell stop order right below this little indecision candle that you see there. Stop above the open range, also the high of the session, regular trading hours, of course. We'll look for 1 hour here. I'd like to see some confirmation from the Three Sisters. And I'm in, guys, and I am in short the NASDAQ here. see if this thing is going to continue or not. And so now it's the waiting game. Just being patient here, guys, pulling back. Sometimes on a move like this, I'll move my stop to break even, but not quite there. I'm going to give this thing a little bit of room to pull back, even all the way to the open range, and hopefully drive down from there. We'll see. All right, guys, so we have come all the way back to my entry, so that would have been break even. Part of me, of course, is regretting not taking a break even here, given that we're looking like some fresh buying is coming in here, but I really do and do want to give this thing a little bit of room to play out. This is also a fairly normal routine pullback with the 9 squeezing into the 21. We haven't yet tagged the underside of the open range, so I think this may still be okay. We'll just let probabilities play out and see how this thing goes. But the significant weakness, as you can see, this is now a bearish engulfing candle on the, just by a margin, but on the daily chart here. Right, started as an up day, and then we broke the low just right in here, and so looking promising to follow through. And then fresh buying came in, as you can see, right down here. And we'll see if this thing will play out. And there it is, guys. Well, that didn't take too long, did it? Not too bad. A nice orderly pullback into the 21 with the 9 squeezing in and then driving down. So that was a kind of a trend continuation trade after the entry here with the market open play. So why did I go short here? Well, we had an up day with a bearish body. Sometimes an up day with a bearish body is more bearish than a down day or a neutral day, because it means it was a failed attempt at rallying during the Asian and UK session, and then coming into the pre-market had already become bearish. In other words, fresh selling had driven prices down from breaking a prior day's high, and then it's all about whether that momentum bearish will continue into the open. That is in fact what happened. And then we had a break of the prior day's low. So now we have a bearish engulfing candle, which is the most bearish pattern that you can get given that failed attempt higher and then driving down below. And we have the break below the open range, 9 below the 21, support from the continued weakness in the S&P, the Dow doing its own thing, not too concerned about that. And you get the idea. And so, and of course, breaking these many 30-minute candles, not just these ones here from the UK, but all the ones here from the Asian session as well, of course, going back. Have an amazing day, guys. Thanks for being here. Appreciate you. We'll talk soon.